Okay, I'm starting with 100 and flipping it into 1,000, trading stock options, more specifically day trading SPY options. So I'm going to pop over and look at SPY. Seems like it's stuck to the upside this second, maybe finding some resistance, but it seems like it's also going to pop and go up when it beats this resistance. So I'm looking at calls. With this new strategy, the way I'm going to play it is I'm looking at the chart on the actual option contract, not on the stock itself. So I'm not looking at SPY chart. I have 100 in the account, obviously, so I'm going to look at the calls, see what I can get for 100. I can get a 598 call, so just a little bit out of the money. Let me look at the Greeks on that. Theta's decent, so time decay is decent. Delta's decent, so the price of the contract moves decent as the stock price changes per dollar. There's a lot more people in the call than put. The open interest is a lot higher, so that's another good sign, so I like that. Coming back to the 598 contract, what I want to do is first I want to look at the 5-day, and I want to zoom in and see what we got. We have two moving averages here only, the 10-day and the 50-day. So the 10-day, the blue line is the 10-day moving average, the yellow line is the 50-day moving average. So what I'm really looking for is for the blue line, the 10-day, to come up and cross the yellow line, the 50-day, and I want the yellow line to kind of either be straight or curved up. I don't want it to be curved down. So this looks good. This looks like we're not quite there yet, but we got to move up coming. So that looks good. Then I'm going to go over to the 5-minute chart because this is what I would actually execute on. And with this particular strategy, basically the only thing that matters, or the main thing that matters, is waiting for this blue line, this 10-day moving average, to cross this yellow line, this 50-day moving average. So I'm looking for the blue to cross the yellow. And when it does, I'm looking for yellow to either be straight or curved up. So it's curved down like this, kind of sloped down. It's no good. I need the 50-day moving average to be flat or curled up, and then I need the 10-day moving average to cross a flat or curled up 50-day, and that's when I would get in. And then the way I would play it is simple. I would just use the 10-day moving average. Say this is a call, so I make money as the price goes up. I would use the 10-day moving average. Let's say it crossed, so now the blue's here and it's below here, and then the candle's up here. The blue would be right here. That would be my stop loss. So stop loss to the downside would be the 10-day moving average. Take profit to the upside would just simply be when the move up starts to slow down. So if it starts to consolidate and trade sideways, or if it just, if it starts falling back down, declining a lot, that's when I would get out. So I'm going to get in when the 10-day crosses the 50, and we have a candle above 10 when it's crossed 50. And then stop loss to the downside again would be the 10-day. Take profit to the upside would be when the stock starts to consolidate, trade sideways, or reverse and go backwards. So that's how I'm going to play it. I'm trying this new strategy. So now all I have to do is just hang out for a little bit and wait for the 10-day moving average to cross the 50-day moving average. And when it does, I can get in. I could be a little riskier and take a little bit more risk and get in when it looks like the blue line is going to cross the yellow line, when it looks like the 10 is going to cross the 50, but I'd rather play it conservative and just be more risk adverse and do it the right way. So I'm going to wait for the 10-day to actually cross the 50 to the upside, and when it does, then I'll come back and I'll get in. Never crossed, right? The blue didn't cross the yellow, so it never told me to get in, so we're good. But now that we're dropping so hard, I'm looking at the puts. With $100 I could only get in a 592 put, a little out of the money. So I'm going to pop over and look at the put. And again, as you can see, I still don't have a blue line crossing a yellow. Like I said before, if it's starting to go up and looks like it's going to cross yellow, I could get in, but that's a little too early. So even if I do want to get in this put, I need to wait for the blue line to cross the yellow. So now I'm still waiting for the same thing to happen, the same indication to get in, but the flip side with the puts. Okay, so I'm looking at the put. We got the blue is finally crossed above yellow, and yellow is pointed up. It's kind of curled up a little bit, so now I can get in. I'm gonna go ahead and jump in for the market price because I don't want to be sitting here like trying to chase the entry. So I'm just gonna grab one contract at market price and see what we get. There we go, got filled at 83, so still not bad at all. And then what I'm gonna do is just stay in this little menu right here. I'm gonna stay looking at the option contract chart, the chart on the actual option contract, and I'm just gonna play it like this. Stop loss is gonna be if we go below the 10-day moving average. So if we go below the blue line, the 10-day moving average, that's when I'm gonna get out, because obviously I'm in a call, so I make money as the price goes up. So if it goes down below the blue line, the moving average, then I'm out. And then for the take profit to the upside, I'm just gonna get out when it starts to slow down, if it starts to consolidate and move sideways, or if it starts to turn around and go backwards, that's where I'm going to get out. And then I'm going to have a sell set for market order. So again, I don't have to sit there trying to, resubmit my order repeatedly until I finally get out. I'll just get out real quick for whatever. And you can see right here in the middle, it shows my position is 83. So I got in for 83 cents per share, and there's 100 shares, right? So you got to times it by 100. So $83 is what I got in for, and now it's worth 110. So that's actually pretty solid. I'm just waiting for the movement to slow down, whether it, like I said, it starts to consolidate, trade sideways, or whether it starts to reverse and go backwards, then I'll jump out real quick. But I did get in for 83, and I'm up like 120, so this is pretty good right here. I'm probably just going to go ahead and pitch it. This was supposed to be a quick trade, just a quick scalp, so I'm going to get out right there for 117. Good deal. No point to even stay in any longer. I was just trying to make a little bit of money, and mission success, right? Mission complete. So as you can see, I made about 34%, $34 for the day. I'm at about 134 if you round. So it's looking pretty good. I mean, like I said, I'm trying a new strategy, so I'm gonna be curious to see how this goes, but so far so good.